All right, welcome to this weekend market reviews for the 20th to the 24th of November 2017. I do apologize for the technical issue that we are currently observing. Let me just pause this. Okay, I think everything should be fine right now. You should be able to see my screen. You should be able to hear my voice loud and clear at your end. Please do apologize again. If you can see that, if you can see my screen and hear my voice, please give me a confirmation message, just a little feedback from your end, so I'll be able to know. Okay. All right, if you are joining in for the very first time, please, as you are moving to the live trading room, click on your settings tab right here. Then select the video quality and set it to the 480 pixel so you can get a better stream quality at your end. Okay. All right, having said that, let's now quickly move into the Forex Factory economical calendar to see those high impact news events that are scheduled for this upcoming trading week. All right, here we are seeing in the Forex Factory economical calendar quite a few number of high impact news events here, mixed with some bank holidays. First of worthy of note here is that there is no economic event happening within the weekend. Okay, thank you for that confirmation, Pierre. Thank you. Let's even set this to from today, Saturday to Saturday. All right. Okay, you can see that we don't have any economic event happening in this weekend, Saturday and Sunday. Nothing is happening right here, so we don't expect market gaps. Okay, we don't expect to see market gaps. Usually market gaps are caused by our fundamental events taking place within the weekends. Okay. All right, you will also notice plenty of species. You can see that on Monday the European Central Bank President Draghi will be speaking. In fact, he will be speaking twice. All right, 2 times. You also have the Reserve Bank of Australian governor will be speaking. There are several species here. Okay, several species, but you have to take bear in mind the FOMC statement. That is the most volatile one that will be coming up on Wednesday around this hour right here. That's it. The FOMC meeting minute will be released. We will not be trading this. Okay, I wouldn't waste time trading within this news release hour. It is not a time that I will want to look into trading the forex market using the news approach. Okay, it is not a right time. Usually it's not profitable to find to trade within this hour. Okay, but bear in mind that the FOMC meeting minute will be released on Wednesday the 22nd of November. That usually causes heavy volatility in the market. Then we have a bank holiday coming from Japan on Thursday right here, and bank holiday coming from America. That means that Thursday is likely going to be a very slow trading day. Whenever you have bank holiday coming from America, especially, the market tends to go slow for the entire day. All right, then on Friday there is really no economic event on Friday. Okay, that's it. It is blank. There is nothing there. At any rate, intraday traders, keep all of these events on your notepad. Take note of their time, their release hours, so you are not trapped in any trade. Okay, enough of talking about this economic calendar. Let's now move into the charts and conduct our reviews, looking at those possible potential trading opportunities for this upcoming trading week. We have so many charts to review here. We have 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15, about 17 charts, okay, to review. About 17 charts to review. So let's begin. Let's start right on. The first chart is the euro against the American dollar, as you are seeing right here. That's it, the euro against the American dollar. Let's actually analyze what's going on. Beginning from let's start from top down, right? From the weekly to the 1 hour time frame. That is how we are going to conduct this review, just to get a clearer view of what directional bias the pair is going to take. Now in the weekly time frame, we have already talked about this. We can keep a level right here. Now let's keep this. Let me just keep this as an area. All right, let's keep that as an area. This is of course the area of resistance, and that was where we got the bounce. Okay, so we are going to keep that. As you can see, I am still holding my trade. I don't intend to close this trade out. I am still holding that trade very firmly. Okay, this is now a bounce, so the directional bias should be to the upside, hopefully for excuse me, for the continuation of this trend. All right, so that's a new bounce. We are now waiting to see if this swing high will be taken out, and if it is taken out, then price will go far. So taking my trade there is an optimal area. I don't want to close that remaining portion. I have already cashed out 50%. I am leaving the remaining 50% to run at a break-even position, at a risk-free position. If price comes back down, kicking me out, then I have only made 50% profit from that trade, and I am happy about that. In the other hand, if price keeps pushing to the upside, then I have hit a home run. Very nice profits for me. Okay. All right. In the daily time frame, you can see clearly that price has broken above our key level of resistance, that falling line right here. Okay, price has now broken above, but we are seeing some hesitation. Let me zoom in the chart so you can see clearly. Okay, that's it. We are seeing some little hesitation right now upon the breakout of this key level of resistance that may now act as a support. Well, from my experience, this hesitation is bound to continue with the type of price action that I am seeing here. Remember, we were looking for some nice pullback, at least to test the trend line before pushing to the upside. But right now, we have gotten this candle, two red candles, then one green candle as of yesterday, okay, which was Friday. That's the much confusion and a sign of hesitation coming for this pair. Okay, so what are we expecting? This line has to go. The job of this line is already done right now, so we can keep it at the most obvious swing high. All right, the previous swing high right there. That is where it should be right now. Then we can also keep one here. Okay, keep one right there. What is expected right now is that price should be trading within this range. Let me place a line there. Just reduce that width within this range. Okay, and somewhere in here. All right. Price is expected to make another push to that area right there, the 1.1878 area. Okay, should make another push to that area, then possibly coming back down for this month to close somewhere around in here, the 1.1789 level. Okay, it's expected to make that move. Then from here on, we might be seeing price pushing to the upside on its merry way. That is what I am expecting. Okay, well, as you probably know, this is a mere prediction. Okay, it might not happen, it might happen, but for me, in my view, this is what I am expecting to happen in the chart. At any rate, I am not ready to click on my sell button. I am not ready to click on my sell button in the euro against the American dollar for now. Okay, at least for now, I am not ready to click on my sell button. So that hesitation should revolve around this area. This is the area of hesitation that price should be swinging up and down before a possible takeoff to the upside. So be careful, don't go short. If you want to go short, then you need to wait around this point, around this zone. Wait for that level to be hit, the 1.1878 area. That is where you should be looking for short opportunities, and you want to cash out before price comes back to the 1.1789 zone. Okay. All right, so that is it. Let's keep our lines this way. I am not going to keep any line around here. I am not going to keep any line there. No, I won't keep that. Okay. All right. Let me take out these levels. Now let's see the 4 hours time frame. In the 4 hours time frame, you can already see that hesitation building up right there. You can see how price has been moving sideways. These levels here are close to the daily level of resistance, so it's an area, and of course that should be what you can see price reaction around that area. So all of this is an area of resistance. Okay, but that doesn't mean you should go short. Don't do that. Actually, what is happening here is this trend line. Well, let's just keep that. Let's just keep that. But this is what is happening right now. Just connect these points. Okay, connect those two bounces. This one's here. That's where price is currently being reacting off. Right there as support. Okay, and you can also see that the pullback came up to that area, and from there on price is now turning to the upside. Aside from this level acting as a support, take your Fibonacci retracement tool from where the breakout started right there to where the breakout ended. Okay, right there. Remember, we got that little sideways price behavior right here before the breakout took off. So let's take our Fibonacci retracement tool from this low, from the beginning of the breakout to the end of the breakout. You will notice that price is trading around our 3K Fibonacci retracement zone. That's the 38.2, the 50, and the 61.8 Fibonacci retracement areas. Okay, so this is our chunk of support here as a confluence point. So it is not an area you actually want to be clicking on your sell button against. You don't really want to be clicking on your sell button against this zone. Okay, price might hesitate around in the air, begin to push to the upside again. Like I said, it is expected that price will push up, then maybe come back again somewhere around in the air. But for now, no clicking on your sell button. Okay. All right, in the 1 hour time frame, I am actually not going to keep this line because we are going to be defining our levels of support and resistance in the 1 hour time frame, and that should cover for that level. Now in the 1 hour time frame, you can see that much hesitation. I actually called it a breather. Price is taking a breather, just resting upon this heavy push to the upside. So this is a move, a sideways price behavior. We might be seeing a continuation move. Okay. All right, so let's draw our levels of support and resistance in the most simplest form in the 1 hour time frame. Anyway, if you want to be very accurate, then you'll be looking at still that channel-like type of price behavior. If you draw this, you will be very correct. You will still be very correct. Okay, you'll be absolutely correct. But I really do not want to keep that. Let's just keep it the standard way, because we know we are not taking any trade within this sideways price behavior. So let's keep this in the 1 hour time frame. We can also keep that high right there. Okay, so it's just a range. Let's take it as a range. Flat, price is flat. Okay, in this type of market, you should not take any trade within that area. On Friday last week, we took a trade here, or this week rather, We took a trade, but we closed it out at a break-even position because trading in this type of market could be extremely risky. You really do not want to do that. Okay. All right, overall, the euro against the American dollar, for me, directional bias remains to the upside, but we are expecting much hesitation until the month comes to an end. Okay, you shouldn't expect much. Like I said, price should, in the daily time frame, push to the upside to retest that area of resistance from now on. So you should not be going short with this pair. Okay, now let's look into the next one, the American dollar against the Japanese yen. This was also another pair that we took a trade in as of last week. Sorry, this week. I am actually doing this review on a Saturday. Majority of traders were actually clicking on their buy button in this pair, not taking note of the monthly level of resistance, and this is a level that we have stressed so many times as a key level of resistance you should not trade against. And you can see how price is already reacting off that level of resistance. I took a trade there. In fact, we took a trade there because it was posted in the signal section for all members to follow. Price now reacted off that point of conference. If you zoom in the chart in the weekly time frame, we talked about this last week. We talked about that possible reversal right here. And as of this week, price has now moved away freely from that level of resistance. Now the American dollar against the Japanese yen is absolutely bearish. Price should keep pushing to the downside. Let's see the daily time frame. Okay, now in the daily time frame, this trade that is still running, I have cashed out about 80% of my profit. Okay, so what is running there now is the remaining 20% of my profit. So I am going to let that trade run for now until the end of this month. By the end of this month, I will be deciding to close this trade. Now, what do we expect going forward with the American dollar against the Japanese yen? Well, as you can see, we had plenty of hesitation here. Actually, in the 4 hours time frame, let me show you that so you can get the clearer picture. Let's keep this level. It is the outer trend line. Let's keep this level. That's the outer trend line. It's a key level of resistance. Let's take out all of these all the lines. Just take out this one. They are not important lines. I will keep this one somewhere in here. Okay, now connect all of these counter trend lines. This one, this one, this one. All of those counter bounces. All right, those counter bounces as a counter trend line. Let's take that here, right there. All right, so I just want to maintain one single line for the American dollar against the Japanese yen instead of keeping this. By the time price comes above this level, then I will be keeping this one. Okay, so just one trend line. This is a key level. It was a key level of support, very key level of support, but now it has been broken down with that momentum breakout bar in the 4 hours time frame. I hope you can see my chart clearly. So right now, at a former boundary between the bulls and the bears have succeeded in breaking below. So right now, this pair is absolutely bearish. In the 1 hour time frame, you will notice that we are sitting below that level, that counter trend line, which may now act as resistance. So for the American dollar against the Japanese yen, you want to stay absolutely bearish. If price makes any pullback to somewhere in the air, you should be looking for short opportunities. Actually, in the 30 minutes time frame, the 3 SMA trend filter is calling for a downtrend. You can see that right there. So let's apply the 3 SMA indicator in the 30 minutes time frame to see what we will get. I was actually following this as of yesterday, being Friday. I was following this, and in the Telegram group I told all of you around somewhere in here that the American dollar against Japanese yen is ready to make her last stroke or strike to the downside, and that actually happened. Looking at that channel formation, okay, upon the push, a flag, which is a staircase, a flag pattern right there, not a staircase. We got that push again to the downside, and we are now seeing another flag pattern. All right, so if that flag continues, somewhere in here you should see price drop back down again. If you are following that in the 30 minutes time frame with this 3 SMA setup, okay, simply wait for the pullback to somewhere around in here where you have that confluence point of a counter trend line running around that zone, a possible Fibonacci retracement area as well, from that high to this low. You can see those Fibonacci retracement zone coming around that point. So if price is able to make that push into that area, you should find another rejection to where it come back down. Okay, so still bearish with the American dollar against the Japanese yen. All right, so that's it. My trade is still running in here. That's my entry, now sitting at a break-even position. I am not ready to close the 20% out right now. I'm going to keep that trade for further pushes to the downside. All right, so that's basically all about the American dollar against the Japanese yen. The directional bias remains to the downside. Let's now look into the other pairs.